If you are earning money outside of your regular job, it is very important to pay attention right now. Side hustle income has grown dramatically in recent years, and the Internal Revenue Service is now paying very close attention. Many people think that side income is small, harmless, or invisible to the IRS, but that is not the case. Ignoring this information can lead to unexpected letters, penalties, or even legal trouble. Side hustles are everywhere today. People are driving for Uber or Lyft, delivering food with DoorDash or Postmates, selling products on Amazon or Etsy, freelancing online, creating YouTube videos, or making money on TikTok. Some even work local cash jobs or online tutoring platforms. Millions of people are participating in these activities, and many do not realize the tax implications of these earnings. One of the biggest mistakes people make is assuming that small side income does not matter. Even if you only earn a few $100s, the IRS considers all income. They use advanced software and reporting systems to track income, and failure to report correctly can lead to fines or audits. The IRS receives copies of 1099 forms from companies like Uber, PayPal, Etsy, and Stripe. That means they already know how much you earned. You cannot hide this income by ignoring it or failing to report it. Another common problem is misunderstanding the 1099 forms. Many people receive 1099s and assume the numbers are incorrect or too small to matter. Some think, "I will deal with this later," or the IRS will not notice. These assumptions are dangerous. The IRS matches all 1099s to your tax return, and if there is a discrepancy, they will send a letter asking for clarification. Ignoring these letters makes the problem worse because penalties and interest start accumulating. Cash income is another area where mistakes are common. Many side hustlers believe that cash payments are invisible. They think if a customer pays them directly, the IRS will never know. That is not true. Banks and payment processors often report large transactions, and patterns of cash deposits can raise flags. You are required to report all income, whether cash, check, or electronic. Failure to do so can be considered tax evasion, which is a serious issue. Self-employment tax is another area that surprises many side hustlers. When you work a regular job, your employer pays part of your Social Security and Medicare taxes. With a side hustle, you are responsible for both portions, often referred to as self-employment tax. This can result in a much higher tax bill than expected if you do not plan ahead. Many people are shocked to discover they owe thousands in self-employment tax alone, a mistake that is extremely common. Is not saving money for taxes. Side hustlers often spend all the money they earn, thinking it is extra cash. They pay bills, buy personal items, or reinvest in their business without considering taxes. When tax season arrives, they realize they owe a significant amount and do not have the funds to cover it. This creates stress, financial strain, and even late penalties. Another area where people get into trouble is claiming improper expenses. While you are allowed to deduct business-related expenses, some people overstate deductions or include personal items. This can trigger an audit. Proper documentation, receipts, and clear records are essential. Keep track of every expense and ensure it is directly related to your side hustle. This includes supplies, software, mileage, home office space, and other necessary business costs. Accuracy is critical. Freelancers and online sellers often underestimate the importance of quarterly estimated tax payments. The IRS requires self-employed individuals to make estimated payments if they expect to owe more than a certain amount. Failure to pay quarterly can result in penalties and interest. Planning ahead and setting aside funds for estimated taxes can prevent unnecessary stress and financial penalties. It is also important to understand how the IRS identifies side hustlers. Many platforms now report earnings directly to the IRS. This includes rideshare apps, delivery services, freelance marketplaces, and online selling platforms, even if you do not receive a 1099 form. The IRS may have information about your transactions through other means, including bank reporting or platform reporting. Assuming that I will not be noticed is a mistake that can lead to serious consequences. Another common trap is ignoring IRS letters or notices. Some people feel overwhelmed or fearful when they receive a letter, so they do nothing. Ignoring correspondence only makes things worse. The IRS continues to add penalties and interest over time, and early response can prevent more significant problems. Many audits or issues can be resolved if addressed promptly. Do not let fear prevent you from taking action. Many side hustlers also fail to differentiate between personal and business expenses. This can be particularly challenging for home-based businesses or freelancers working from a home office. It is critical to clearly separate personal and business finances. Use a separate bank account if possible and keep accurate records. This not only protects you during tax season, but also ensures that deductions are legitimate and defensible in the event of an audit. Record keeping is essential. Many people rely on memory or a few receipts thrown in a drawer. Modern accounting software or even simple spreadsheets can help track income and expenses. Keep digital copies of receipts and invoices. Organize records by month or by project. Detailed records are your defense in case the IRS questions any entries on your tax return. It is also critical to consider the timing of income and expenses. For example, income received in December but deposited in January may need to be reported differently. Similarly, expenses paid in advance may or may not qualify for deductions in the same year. Being aware of these rules helps prevent mistakes and ensures accurate reporting. For those running multiple side hustles, it is easy to mix up income and expenses across different activities. It is advisable to track each side hustle separately with clear records of revenue, expenses, and any 1099 forms received. This will make tax reporting much simpler and reduce the risk of mistakes. Another mistake people make is underestimating the impact of self-employment tax on Social Security and Medicare contributions. Unlike regular employment, where employers pay half the contribution, self-employed individuals are responsible for both parts. Understanding this helps avoid surprises when filing taxes. Understanding tax deductions is another key area. Not all expenses are deductible, and some may require documentation to support the claim. Popular deductions for side hustlers include office supplies, software subscriptions, internet bills, phone bills related to business, business travel, and advertising costs. It is important to know the rules and only claim expenses that are legitimate and necessary for your business activity. Many side hustlers also forget that hobby income is still taxable. Even if your side activity is not a full-fledged business, any income earned must be reported. Classifying a side hustle incorrectly as a hobby to avoid taxes can lead to serious penalties. Insurance is another area often overlooked. Health insurance, liability coverage, or even business insurance may provide tax benefits or protection, depending on your situation. Contributing to retirement accounts as a self-employed individual can also help reduce taxable income. Planning ahead for taxes and savings is key to financial stability. Education and professional guidance are valuable tools. Many side hustlers try to manage taxes alone, and make mistakes that could have been avoided with advice from a certified tax professional or accountant. Even one consultation can save thousands of dollars in penalties and interest. Keeping up with changes in tax law is crucial. The IRS frequently updates rules related to self-employment, deductions, and reporting requirements. Being aware of these changes helps prevent mistakes and ensures compliance. Websites, newsletters, and official IRS publications are good sources of reliable information. Technology is a friend when it comes to reporting side hustle income. Accounting software, spreadsheets, and digital record keeping make tracking income and expenses easier than ever. Many applications can connect to bank accounts, automate expense tracking, and prepare reports for tax filing. Using these tools reduces the risk of human error. Finally, the mindset of preparation is essential. Side hustlers who ignore taxes or treat them as an afterthought often find themselves stressed, confused, and financially strained. By approaching side hustle income responsibly, tracking earnings, saving for taxes, documenting expenses, and seeking professional guidance when needed, you reduce the risk of audits, penalties, and surprises. Remember, paying attention to your side hustle taxes is not just about avoiding penalties. It is about understanding your financial situation, planning for the future, and keeping your business activities legitimate and professional. Even small side hustles matter, and every dollar counts when it comes to reporting and paying taxes correctly. The key takeaways are: clear. Report all income. Keep detailed records, separate personal and business finances. Track expenses carefully, save for taxes. Understand self-employment tax, respond promptly to IRS letters, and seek professional guidance when needed. By following these steps, side hustlers can reduce stress, avoid penalties, and protect their earnings. Side hustles offer amazing opportunities to earn extra money, explore new skills, and build financial independence. However, they come with responsibilities, especially regarding taxes. Taking the time to understand and manage these responsibilities ensures your side hustle remains a benefit rather than a liability. Whether you are driving for a rideshare service, selling handmade crafts online, freelancing as a writer, or earning revenue from social media, the same principles apply. Proper reporting, record keeping, and tax planning are essential. Learning these principles early can save thousands of dollars and prevent headaches in the future. In conclusion, the IRS is watching side hustle income more closely than ever before. Ignoring reporting requirements, failing to save for taxes, mismanaging expenses, or neglecting correspondence can lead to significant financial problems. By taking a proactive approach, educating yourself about tax rules, and using proper tools and professional guidance, you can maintain compliance, protect your income, and continue growing your side hustles confidently. Side hustle income is a great way to earn extra money, but it is also a serious responsibility. Treat it like a business, even if it is small. Keep records, save for taxes, and respond promptly to any IRS communication. With the right approach, your side hustle can continue to grow without the stress of penalties or audits. Please subscribe for more updates. Thank you.